date in the midst of a financial crisis where the Bitcoin white paper was first published. Special shout out to Jennifer, our guest today, who reminded us of that in our prep call yesterday. We're sadly missing Greg today. Greg is a big lover of Halloween, but he can't be with us. But I do love one of the things that Greg says about Halloween. It's one of the fun holidays in that expectations are relatively low, and it's just all about fun. So I hope everybody out there has an amazing Halloween today. David, Sid, have you guys got any big plans, any nice costumes that you're dressing up as tonight?
I was going to go as a Pope in a Balenciaga jacket, and then I actually looked at the prices for Balenciaga coats, and that killed my costume.
How about you, Sid?
Yeah, likewise. I have the same costume as last year, but this year is a bit better. It's like a cowboy hat and some boots, specifically in the theme of the month, the most bullish month since January of this year in terms of Bitcoin. So happy to be the cowboy tonight.
Nice, very, very cool. David, if you want, we can use Midjourney and we can make you look like you're wearing a Balenciaga coat if that's helpful to you.
Oh yeah, definitely. Let's make that happen then.
Okay, good stuff. We'll give it a go after the call. So to our agenda, we cover a great conversation with our special guest Jennifer Murphy, founder and CEO of RUNA Digital Assets, as well as news, macro, Web3. Sid was at an ETH hackathon last week, so I'm super curious to find out how that was. Before we get into it, some quick housekeeping. If you are watching on YouTube, scan the QR code to access all of David's fantastic research. He put a great report out this week around tokenization, which I highly recommend. If you are listening on podcast, all of that will be in your show notes. And no matter what platform you are consuming this from, don't forget to like and subscribe. That helps others find the show. Now, excited to welcome Jennifer Murphy, CEO and founder of RUNA Digital Assets. Jennifer, welcome to the show.
Ben, thanks for having me.
We are very, very happy to have you here. So Jennifer joins us as CEO and founder of RUNA Digital Assets. And before that, spent a 30-year career in asset management. 7 years CEO of Western Asset Management, 7 years CEO of Western Asset Mortgage Capital Corp, and 15 years at Legg Mason Capital Management, where she finished at CEO. So wow, that's a very established and impressive resume there, Jennifer. So thank you for joining us. I'm curious, like, what made you join our industry? What attracted you to crypto?
Ben, in 2004, I had a formative experience mid-career. I was working for my boss and mentor, Bill Miller. He was, at the time, a very well-known equity manager, still much more famous now. But he was, at the time, evaluating the Google IPO. Google was going public in 2004. It was already a well-known and established search engine, so it was a relatively big deal that it was going public. They used a little bit of a different model than other IPOs. It was a Dutch auction model, but certainly of great interest. So Bill was evaluating that. But there were enormous questions around Google's ability to monetize its business model and other doubts. There were certainly other big search engines at the time. So there was a lot of controversy around this IPO for many reasons. And as it turned out, in the final analysis, the IPO price, which the banker sets a range, and generally that range is pretty on point. The range had to be reduced dramatically in the case of Google's IPO. And as it turned out, only 2 institutions participated in Google's IPO. One was Fidelity and the other was Bill, which is astonishing when you think about it. Its valuation then was 23 billion in market cap or so. It's now 1.5 trillion. So I think as far as performance over that time period, it probably would be almost unbeatable in terms of its returns to shareholders, and yet no institutions participated. So that, except for the 2. So it really struck me then how something really can be unfolding right in front of you, and people don't appreciate its significance. It's really hard to anticipate things, even in the near future, much less the far future. And so in those moments when you do have insight, where you think you do understand something that is clearly unfolding, I think you gotta act on it. There aren't that many, in a lifetime. So that's how digital assets were for me. My boss, Bill Miller, is a Bitcoin OG. He started buying Bitcoin in 2013. And I've talked to him about it a lot. And in addition, at Western Asset, we were using the blockchain-based applications to help streamline our operations. So those two things sort of entwined for me. And I thought this is the most important thing happening in financial services and maybe beyond. So that was how I got into digital assets.
Wow, what a story. I love that, to be kind of that close in such an incredible IPO, and who'd have thought kind of 20 or so years later where they would be now, and kind of the dominant position they have in search particularly. Wow, very, very cool. So 2 years ago, you made the leap, you jumped into digital assets, you launched RUNA. How did you come up with the name of the fund?
When we started the company, my partner Max Williams and I founded the company together. I was looking at the time, every single name that had the words bit or coin or block or chain was already taken. So there was no sort of direct way to name it something more directly related to digital assets. So I went back to, I'm a huge science fiction fan, went back to one of my favorite science fiction books called The Sparrow. In it, there's a species of alien named the RUNA, and they're very interesting, and their evolution over time is very interesting, and I think has some parallels to digital assets. But also in looking it up in some obscure dictionary definition, RUNA supposedly means in mathematics a sequence, and so that seemed kind of relevant for blockchain. So that was how we settled on the name. Very
cool. I like that. That's a nice story. You know, I don't think it's a bad thing not having block or chain or coin or file, whatever. And you're not, I think that's okay. You're more memorable now. Fantastic. So on the prep call yesterday, we were kind of talking about markets with the rest of the team, and I guess you stated that you think we're in a bull market, and we have perhaps been in a bull market for some time now. So we'd love to dig into that a little deeper, if that's all right.
Yeah, Ben, you probably know, of course, John Templeton. He has a great quote about markets. He says, bull markets are born on pessimism, grow on skepticism, mature in optimism, and die in euphoria. And I think that's a great template for this market. I think at the beginning of, if you think of 2022, you know, Bitcoin was down 64% in 2022. Most things were down 80 or 90%, just a brutal, brutal bear market. And prices were so low coming into the year. The sentiment indicators were at extreme fear. And it was really just a perfect setup for low expectations, for pessimism. So since then, as you know, Bitcoin's up over 100%, Ethereum's up over 50%, many tokens are up even more than that. Those things, those kinds of runs, appreciations are consistent with bull market runs, not bear market runs. Our team went back and looked at the performance of the top 100 tokens in bull and bear markets, and you just don't see upswings like that in a bear market environment. Also, we haven't had the kind of drawdowns that you have in a bear market environment. You know, we've had drawdowns on the sort of order of 20 or 25%. That's consistent with many bull markets in the past. It's not what happens. And bear markets are much more brutal than that. So sentiment, you may know this, but sentiment currently in crypto is that greed. So it's not exactly a sort of a fear environment. And I think we're well through pessimism. I got some pushback a month ago when I was telling people I thought we were in the skepticism phase. You know, I think we're clearly in skepticism at this point. I think things like, there's a number of catalysts that I'm sure we'll get to that will, I think, likely push us more to that optimism and ultimately probably euphoria phase. But that's why I think we're already in the bull market, Ben. I think people often miss the beginning because the beginning starts at such a low point.
Yeah, I think that makes a ton of sense. I love that you started with a quote there, because as we all know, like, history doesn't repeat itself, but it does rhyme. And I also quite like a comment you made just around skepticism. You mentioned that you were at a dinner party and someone said, "Oh, Bitcoin, is that still going? Like, are you still doing that stuff?" And David commented he'd had the same, and I didn't say anything, but I'd also had the same. And it's kind of one of those funny conversations that you get periodically, typically kind of this time of the cycle. So I'm curious, the digital asset industry is still very nascent. We've done a lot in a short period of time, and I, like you, are incredibly excited for what the forward path looks like. Given we've only had a few cycles, how do you think kind of like this bull market might be defined versus the bull market of 21 and the bull market of 17, which was slightly different, had different qualities, let's say, to them?
Yeah, Ben, I think this bull market that is much more important. And the reason I say that is comes to the ETF, the likelihood. I think it's a matter of when we get a spot Bitcoin ETF, specifically from BlackRock. And let me explain. You probably know this, that the gold ETF back in the early 2000s, 2004, really was one of the most successful ETF introductions ever. It reached $1 billion in assets in 3 days. That was a record. And that record wasn't challenged until 2021 when the BITO, when the Bitcoin futures ETF was launched, and it reached $1 billion in 2 days. I think the introduction of a spot ETF will easily reach $1 billion in a day and break those records. But that's not the reason I think it's so important. I think that that'll be bullish. Certainly that'll generate actual buying of the underlying Bitcoin, which is great. But I think what's really important is, and I think you all have talked about this before, but I think this has to do with the adoption curve. As you know, Bitcoin and other digital assets, they're global networks. And networks grow in value exponentially as they add nodes to the network, as they add users or participants in the network. So what I think is so important about this bull market is, the adoption curve sort of begins with the innovators, people like Hal Finney and Satoshi Nakamoto and Vitalik Buterin, people like that. But they're a very small part of the population. Then there are people that really value trying things, being like early, trying things first, getting an advantage. Those are the early adopters, and they're willing to take risk and sort of do their own work to do something on their own. Many technologies fail at this point. They fail to reach the mainstream adoption because they can't cross the chasm. They don't cross the chasm from those early adopters to mainstream adoption. In my view, that BlackRock ETF specifically is likely to push us across that chasm to full mainstream adoption of Bitcoin and digital assets. And the reason I say that is the characteristics of people who are in the early majority tend to be what those people are looking for is completely different from what the innovators and the early adopters are looking for. The people in the early majority it's really a social thing that they're looking for. They're looking for something that is proven, that is industry standard, that takes minimal learning, that is they can depend on, that they can feel it's tested, it's used by their peers. Those are the characteristics of something that a mainstream early majority wants to see. That, in my view, a BlackRock ETF fits that to a T. That's what's so important about it, is it really transforms Bitcoin and I think likely other digital assets into the kind of product, the kind of service, the kind of investment that early majority is looking for. So that's the reason I think really that it's maybe the most important thing, in my view, it's the most important thing that's happened since Satoshi Nakamoto.
Thanks a lot, Jen. I'm as optimistic as anyone about the ETF and the flows that it could bring in, but something that does concern me is what will make this stick? Do you think there's going to be some more persistent themes that will be here with us once we, get past the narrative of the ETF, for example? Like, do you think that this is going to be something that's exogenous crypto, like the Fed easing cycle, maybe de-dollarization as a trend? Do you think that there's going to be some endogenous factors like the halving that's going to get people to stay inside the ecosystem and continue to propagate those flows? Or do you think it's some combination of those two things?
Well, I think all of those things are tailwinds, right? So we have lots of tailwinds. There's certainly some headwinds too, but I think there are lots of tailwinds there. But David, I think one of the things that I'm fascinated by is how bored we get, all of us, so easily with the fact that companies like JP Morgan and Google and Nike and Meta, they are pouring money into the development of blockchain-based products and services into digital asset type applications. Most of it, I think they learned maybe from Mark Zuckerberg's Meta experience that maybe they shouldn't lead with it front and center, that's a high risk strategy. So even Mark Zuckerberg had to pull back from that after a lot of criticism and how much money they were spending. But they continue to pour money into developing the metaverse and hardware and software products around it. So, but I'm sure you saw, Google is very active in supporting companies and projects in blockchain and digital assets. So, but they don't talk much about it. It's sort of advertised only maybe to us and not really to the world at large. So those companies do not start and stop on a dime. They have continued. JP Morgan, despite Jamie Dimon's, disparaging comments over the years, have been a leader really in developing blockchain and digital asset infrastructure and applications, and they still are. So I think that's really the thing. I think we're going to move through this period of just tremendous explosion of experiments and start to sort of coalesce on these really big, enduring, high traction uses of blockchain and digital assets.
So if I could follow up, what would your investment strategy be as we get into 2024? And I know it seems like we still got 2 months to go, but this is kind of how we think about things in these markets, right? Like, do you think it's going to be focused primarily on Bitcoin and Ether still? Are you going to be moving and looking for newer projects in the altcoin space? How are you thinking about it?
Well, David, the way we thought about it coming in early in the year, it sort of occurred to us, this is a bull market, even though it doesn't feel like one, and we should be positioned appropriately. So we've been fully invested, and we did spread our investments a bit more than we typically would into sort of OG projects that we have high conviction about, as well as newer projects that we thought would potentially catch either the narrative or that sort of high beta upside that those smaller projects can offer because of their very, the sort of possibility of a very wide variety of outcomes. And what surprised me was I was expecting Bitcoin and Ethereum to sort of go up first and it kind of to go down the quality curve, sort of other sort of slightly less high quality things, but still established projects to go up, et cetera. And what happened was it's really a barbell in our portfolio. We do own Bitcoin. That's done hugely well. And then a lot of these sort of small, more speculative projects, those are the other things in our portfolio that have performed really well to date. So that is not what I expected. I guess that's part of the reason to have a portfolio, right? So I'm not sure what to expect. And one thing we've talked about as a team that I think is worth paying attention to is I do think this cycle, for the reasons we've talked about, is likely to attract back the big hedge funds and other institutional investors. And there are very few tokens or projects that are of a size to be investable for those kinds of size of investments. So I think you could see some of the older projects that still have relatively big market caps benefit from that. I think maybe all of them will benefit initially, but then I expect there to be some sort of sorting mechanism because some of those projects I think are dead on their feet and likely to sort of continue to dissipate in value over time, while others I think are real and the fundamentals will continue to grow to support them. So I don't have a great answer for you, David, but that's kind of what I'm expecting.
Yeah, I think you're 100% right, Jennifer. We've definitely seen just on the desk people that haven't been active since 21, kind of picking up the phone, wanting more updates, even starting to trade. So I think that aligns 100% with your perspective there. One thing I'm curious on is the market, you touched upon it a little bit, perhaps could be slightly more efficient. To your point, there's a few projects out there that maybe don't have a ton of things being built on top of them, but there's still a very large market cap. Do you think we continue to see the market become more efficient and more dispersion of returns between those that have solid fundamentals and those that perhaps are 2017 and 2019 stories?
Yeah. Can anyone explain why Sandbox trades where it does? I don't want to be, I think our analyst Ned told me they have like 100 daily active users or something like that, like 100, I'm not sure. To me, that is almost behaving like a placeholder. It's hard. It takes a long time to build gaming and metaverse software, and it's kind of a placeholder for something that is almost built. So I'm one thing we found though, Ben, Alex Bodie, who is another partner of mine, she does a lot of quantitative research for us, and she went back and looked at do fundamentals drive prices, and the answer to that was a resounding not really. There's only a loose relationship between fundamentals and prices so far. I think that's because of the immaturity of the asset class. But then she asked the question, do prices drive fundamentals? And the answers again was sort of, well, not really, but sometimes, so sometimes it's actually price going up that drives, fundamental activity. So it's not an asset class where we can just take what we knew or what we've learned in equity or fixed income markets and just apply it directly. You really have to think about things, I think, more using more tools from venture capital and from derivatives like call option kind of thinking to really think about what might work here.
I would call out, and agree with what you said, Jennifer, but I would call out that I feel like there are some things, even in the traditional finance space, like I'm looking right now at NVIDIA, for example, that's driven almost purely by momentum. I mean, it's not that AI doesn't have a story around it, but still a lot of the moves we've seen in terms of 3x over kind of valuations that it's seen, I think things like that definitely kind of call back to that same idea of like prices kind of moving up. But I kind of want to think about what else is out there. We've discussed a lot in terms of other sectors outside of just Bitcoin or like some of the platforms, the networks. We've talked a lot about gaming, for example, GameFi as an opportunity, or how DeFi itself has kind of softened, but there's an opportunity for maybe DeFi 2.0 to kind of come back here. Could you kind of talk us a little bit through what you're seeing?
Yeah. First of all, when we sort of begin mostly with a bottom-up approach. So Alex, Max, Ned, and I are all sort of looking for projects and ideas that are sort of at a granular level and sort of bubbling those up to each other as potential ideas. What happened last year and coming into this year was a lot of those ideas were DeFi type ideas, were some of the innovations in DeFi that seem to be getting real traction, and they're not new, but they're really, I think, proving that they can build, a global franchise. So Uniswap is not new at all, but that's a favorite of mine in particular. And just very simply, Uniswap is it's kind of the JP Morgan, I guess, of digital assets, in the sense that it is, I don't think digital asset markets are going to thrive without Uniswap thriving along with them. I think even though we're in a new bull market and we've had a couple of years of growth, Uniswap continues to be below the levels that it reached in terms of monthly active users or transaction activity or total value locked that it reached, in previous years. And yet these markets are, I think, going to be much larger soon. And I think Uniswap will participate along with that. And one sort of simple metric that we watch is, I hope, Ben, you're not going to chastise me about this, but we look at Uniswap relative to Coinbase. And at the beginning of this year, and they're different, they're very different in many ways, but sort of simplistically, at the beginning of this year, Coinbase's market cap relative to Uniswap was about 2 times. Coinbase worth twice as much. Now Coinbase is worth 5 to 6 times as much as Uniswap, and we think that that gap is likely to narrow. So I think it's likely to narrow by Uniswap going up. So that's just a sort of simple public market sort of comp that you can use as one way to think about Uniswap. But I think really Uniswap is just it's sort of proven. Has significant traction with a large base of users and will be vital to the ongoing, thriving ecosystem of digital assets. there are some risks for sure. I think the regulatory risk is still there. I think the recent actions by Uniswap Labs, I think, have introduced some governance risks and questions that maybe weren't so reflected in the price. So so far, I'm dead wrong on this, by the way. Uniswap's one of the few things that hasn't gone up this year, but we still like it a lot. But also things like Lido and UIDX and others that are really, I think, really carving out space for themselves and will benefit from a lot of the likely dynamics going forward.
Yeah, thanks for that perspective, Jennifer. I'm really curious also to just double click on your Uniswap take. Recently, I mean, they've been announcing the rollout of Uniswap V4 and also Uniswap X, which is they route some trades to centralized exchanges. Curious to hear your take. There's been a big debate on crypto Twitter for several months now on the profitability of being a liquidity provider on Uniswap, where, you know, as price discovery usually happens for the large pairs on centralized exchanges like Binance and Coinbase, and then LPs basically suffer as a result of that. Do you actually see what do you see as a future of on-chain liquidity provisioning, especially on these large dexes like Uniswap?
Well, I think I'm not an expert on this, Sid. I don't know that I have any great insight, but I think my understanding is, and you probably know this too, that Uniswap, the V4 will allow for essentially more for developers to be more creative, to have more tools at their disposal to create the kinds of things that allow LPs to earn more. So I think it sort of opens the door for that and strengthens their hand. I think also it kind of between that and Uniswap X, it kind of shows that if you think about a network and what a decentralized exchange is, what makes it valuable, what sort of determines its fitness, liquidity is a huge driver, right? And I think that Uniswap is just this concentration of liquidity that is likely, unless there's a really, really strong, effective challenger, that's likely just to grow because liquidity begets liquidity. So I think they have the time and the resources to continue to upgrade their software and add these tools, add things like hooks that allow to continue to build the ecosystem in a way that is more advantageous for LPs, and that also I think some people believe sort of wipes out some of the other new entrants that have tried to pick off some of the pieces that Uniswap doesn't do so well. It kind of shows the power of that huge liquidity pool and the resources they have to add functionality, to add flexibility, and continue to fend off, you know, the sort of smaller challengers. But I don't know, Sid, if you have a different, or if you have anything to add there, or David, yeah.
Nothing to add there.
So any thoughts on that, Sid?
No, yeah, I think it makes sense. It's TBD, right? How this ecosystem is going to evolve, whether more moves off chain or remains on chain. So I think we'll see over the coming months.
Yeah. Personally, I'm excited to see what the world looks like when you get more real world assets on chain and what Uniswap are able to do there. Obviously, there's a question around regulation there, but I think to your point, Jennifer, I think the TAM for something like Uniswap at that point becomes very, very large and it becomes instantly global. But anyway, sorry, David, over to you.
No worries. I actually was kind of curious about how Jennifer thinks about GameFi, actually, because, you know, I think as a sector, it's very interesting, but, you know, like anything, like even though I think we are moving to more of an application centric kind of thesis in terms of the trading environment we're in, it's very hard to choose winners. So what can you do in a situation like that? Do you have to go default to choosing the platform instead? Do you just pick a handful of apps that you think might be the AAA game that kind of really gets people involved? Like, what do you do in that situation?
Yeah, it is a dilemma. And one thing we really appreciate is you all just hosted Immutable X in your offices. Max was up there for that. That is one of the things we own, David, a platform that supports, you know, that's specialized, it's, you know, specifically honed for gaming. And not only that, has what appears to be just a great leadership team and a really strong track record of partnerships that are aligned and likely to drive, you know, revenue through the system over time if they're successful. So so we like Immutable X a lot because of its platform qualities, but David, you're right. I've looked at lots of games. Ned, our analyst, focuses on that for us. He sort of did a review for us recently of all the games out there because we have almost no exposure to them because I can't get comfortable, or the team can't either, to invest in specific games. We've looked at Illuvium many times, and I just can't develop conviction about it at these prices. And it's down a lot, even from where it traded a couple of years ago, and still I'm having trouble having conviction about it. The things that I think we're watching with a lot of interest are card games. There seems to be some, that seems to have reasonable success on in blockchain, type applications. Fantasy sports, that seems to be getting some real traction. That seems very promising. So we're spending some time sort of tracking some things there. And gambling, David, gaming and gambling are always hotbeds of, where new technology gets used first and often gets developed first. So I think, even though it sounds funny, it's actually a serious and I think a good way to track, where things are working and what business models work. So we're sort of tracking all those things, but not finding a lot to buy and put in a diversified portfolio.
Yeah, I think that makes a ton of sense. And thank you very much for plugging our event last week. That will actually be coming out on podcasts in the next week or so. So folks, make sure to check out that. And I agree. I think the Immutable team certainly told a very persuasive story. So it was the first I'd really got into it. So it's good to hear from them. Now, I'd like to, final question for you, Jennifer, and hopefully you'll stay with us for the rest of the call. We started the conversation talking about the evolution of the market and what the bull market might do for Bitcoin. In the prep call yesterday, we talked about network theory and phase change. I'd love you to kind of just break that down for your audience a little bit and kind of how you think that might play a part in the coming years.
Yeah, I think Ben, one of the things we've talked about it yesterday and today on this call, the tools that are used for equity analysis, for fixed income analysis, and are really, in some ways they share a lot of common time-tested investment principles, and we buy into those things too. We're definitely using those principles when thinking about what to buy. But I think that the characteristics of digital assets as networks make them different than equity or fixed income or other types of assets. So I think we're spending more time, and I think it's probably worth our industry, or the investment professionals in digital assets, to spend more time on network theory and on the characteristics of networks to think about what that means for digital assets and how to value digital assets. So, for example, there's some good work and interesting work in network theory around what characteristics drive an outcome in networks of winner take all versus winner take most. The sort of fittest get rich. And that can make a big difference when evaluating something. So, for example, when Max and I started, our view was in terms of Bitcoin, that Bitcoin as a global store of value and ultimately as potentially a global currency, that it was winner take all, that Bitcoin was so fit for purpose and so dominant relative to the other possibilities that there was going to be whatever second best there was would be, just miles and miles behind it. And so we essentially ignore all of them, and our bets on where we think the winner take all is. And I think in the not winner take all networks, they're really, they have different characteristics. They tend to follow power laws in terms of the dominant player versus second, third, and fourth. And so in thinking about whether something is likely to be winner take all versus a more typical network where there's more of a power law of competitors, those behave differently and they're valued differently. So I think we're thinking about those things and how networks grow and what's likely to succeed when thinking about ultimate value. And I guess another thing I would mention is you've probably heard of the Lindy effect that says sort of the longer something's around, the longer it's likely to be around. There's a lot of research in network theory that backs that up. So what's the implication of that? The implication is if there's tokens that have projects that have been around for years and are successful, then the chances of a new kid on the block knocking them out are falling fast. Every day, every week, every month that goes by, you really have to introduce something that's so dominant to knock them, out of the game. So I think that changes our evaluation of projects over time. So something 2 years ago that might have looked very promising, if it hasn't succeeded by now, there's probably serious doubts about whether it's likely to ever be a significant, long-term winner. So that's where I think we would all benefit from spending a little more time on thinking about the network aspects of digital assets.
It's amazing. You're making me rethink my personal portfolio now. It's been a painful afternoon. Jennifer, thank you so much for that. I know you're staying with us the rest of the call. I have a ton more questions, and hopefully we'll get to ask those in person at some point.